Hey, fellow dads, as part of our ongoing commitment to empowering dads everywhere, we're thrilled to kick off our inaugural installment of our monthly series called Dad Talks. In this series, we bring industry professionals from our exclusive Good Dads Club Facebook group to share their invaluable wisdom and insights on navigating the complexities of fatherhood, marriage, and household management. Today, we're honored to have one of our very own, Ronnie Withaeger, a seasoned CPA and tax professional, grace our podcast. Ronnie is not only the owner of Ronnie Withaeger CPAs, but also the brains behind the Prosperity Society, an online resource dedicated to educating individuals on taxes and finances. Get ready to dive deep into the world of household finances, tax strategies, and everything in between. So, without further ado, let's extend a very warm welcome to my good friend and old high school buddy, Ronnie Withaeger. Ronnie, how are you, my friend?
Oh, I'm doing good, man. I'm doing good. Thanks for putting this together.
No problem, no problem. Tell us a little bit about yourself. Like tell us your dad background, how many kids, married. Tell us a little bit about yourself and then your profession and why you got involved in that profession.
Cool. Yeah. Well, I grew up in Las Vegas, originally from Illinois. Ended up kind of after school going to UNLV, and I majored in accounting. So I kind of did your traditional path of accountants, kind of go to school, get a degree, and then study your butt off for the CPA exam,
Mm-hmm.
and just kind of start jumping into the world of taxes. And so that's kind of the route that I went as far as career goes. As far as family, I'm a girl dad. I've got
Hey,
four girls. I've been married
man.
for a little over 15 years, and they keep us busy. They're ages 11, 9, 7,
Oh,
and 4. So about 3 years ago, we relocated from Vegas up to just south of Salt Lake area. So I live in Utah now,
mm-hmm.
and we've been loving it up here. So great place for families and great place to raise your children and all that sort of stuff. So, man, I'm doing my thing, just grinding through life, and been doing the accounting thing for 15 years and been on my own for the last 5.5. So it's been awesome.
That's awesome. That's awesome. So, let's I don't want to waste anyone's time. So I want to jump right into it and kind of get this thing going. So, like, in regard, like, the reason why I wanted to put this together and put this on in general was, it's February, mid February, and it's tax season time, right? So, if you're a W 2 employee, you've already received your W 2s and you are preparing to get your taxes done so that you can hopefully have a return of some sort. Are there any, like, what are the basic concepts of taxes and like how do they apply to our households?
hmm Yeah, so I mean, essentially, taxes is kind of like our share that we pay to Uncle Sam to be able to kind of just live in this country. I mean, that's kind of like the simplest way that I explain it. There's a lot of services and things that the government provides, and in exchange for us to be here, it's kind of one of those unavoidable expense items that we all have. Most of the time, it's one of our largest expenses. And the way that it's all set up is just kind of based on this staggered tax bracket system. So, whatever amount of money that you end up making, in between zero and, $1 billion, there's these brackets that those amounts are taxed at. And so you might have heard, hey, I don't want to, jump up into the next tax bracket, but it's really actually just a staggered system where it's like the first $11,000 is taxed at 10%, and kind of goes up from there. But essentially, it's how much money did you end up making minus some of the deductions and credits that you're allowed to take versus the amount of money that you paid in.
Mm.
And that sounds like a pretty simple formula, but there is kind of a lot that goes into that. And sometimes there is a filing that can be complicated to be able to figure out. And whatever that difference is either the amount of money that you still owe, or hopefully the money that you're getting back.
All right. And what are some of like the biggest misconceptions about taxes?
Well, some of the biggest misconceptions about taxes is that people who make a decent amount of money don't pay a lot of taxes. That is not true. I mean, I do 1,000 tax returns a year, and people who are in higher income limits definitely pay a lot of money, and,
Right.
and so a lot of people don't really understand how much of the total income tax is paid by people who, are considered wealthy. Um, the the people who are lower income typically are getting back money that is paid by other people, and so that's a big misconception. Another misconception is probably that there aren't a lot of taxes that are paid, but when you start adding up self-employment taxes, income taxes, state taxes, gas taxes, property taxes, and all these different taxes that we have, a lot of us are giving significant portions of our income to the governments and municipalities that we live in. So
Mm.
um, those are a few things. Another big misconception would be how scary the IRS is, and the fact that people go to jail. That's really actually rare that
Right.
that we get into those types of spots. But I would just say those are a few misconceptions that are worth mentioning. But typically, if you know a little bit and you're filing and all that sort of stuff, you don't really have much to worry about as far as uh, those types of fears.
Yeah, that's some pretty good information, Ronnie. Like one, I guess one of my questions is like, from a percentage perspective, how much money are we actually getting back of the taxes that we paid out?
Well, that's hard because everybody's situation is going to be different. I
Hmm.
mean, in a perfect world, when you have money, when you get a job and you fill out the initial documents, and you're checking that you're single or you're married and you have dependents and those types of things. In a perfect world, that withholding is supposed to be pretty close to zero.
Mm.
Now, sometimes people will fill those things out and they'll, put that they have kids so that they get more money back when maybe they don't have kids. And then, they'll end up owing. But
Mm.
like in a perfect world, those withholding tables are supposed to keep you really close to zero.
Got you.
Uh, and so it really does kind of vary, though. I mean, some people withhold extra so that they get refunds back and that sort of thing. But, the idea is to break even.
Right. Right. I think for me, like we pay more in on my wife because she's a CCSD. She's a teacher, school teacher, and
Yep.
I'm self-employed. So
Right.
we pay more in on taxes for her
Yep.
than Or I think the other way for self-employed too is to just open up a tax account. Correct.
Well, yeah, I mean, like if you're self-employed, you can always pay quarterly or you can make estimated payments. Um, but in the end, especially if you're married filing jointly, I mean, like the bottom line is going to be the bottom line. Whether
Right.
you have it withheld from her W-2 or you pay quarterly, in the end, it's together. So whatever you put into that bucket is going to factor into the calculation there.
Right. And I don't want to talk too much about business because we'll discuss that later on down the
Yeah.
line in April when most people who own businesses starts to file their taxes because they probably have to pay. And what's the difference between those two things? Like I know some people are like, "Well, why do you have to pay and I don't have to pay or why you receive money back?" Or, like some I have a sister, right? My
Yeah.
sister-in-law and husband, they get back like $300 at the end of tax season is them two plus one child. But I can remember way back in the day where my tax returns were like 3 grand sometimes. So what's the
Yeah.
offset of that? Is it based surely on your income, or is it based surely, or is a combination of the income and what you paid into taxes
Yeah, I mean,
and
like in your guys'
deductions?
case, yeah, it might be just like all those kids you had back then.
Yeah.
Like everybody's situations can be a bit different, but like depending on income level and the amount of children you have, I mean, like, one of the things that you'll hear quite a bit is like when somebody has a lot of kids, like they get these big refunds because like a child tax credit
Hmm.
is worth like $2,000 right now.
Right.
So like, I mean, and if you're low income too, like you might have like an earned income credit that gets like tied into that.
Right.
And those are like refundable type credits that the government's going to pay you.
Mm.
And so like if you had a normal W-2 job and you've been withholding the amount of taxes that you should be withholding throughout the year, and then you have these credits that you're getting, now all of a sudden you're getting thousands of dollars back. And so some of those types of things kind of factor in. I mean, like I kind of simplified it when I told you like, okay, it's like income minus your deductions minus your credits, and then the amount that you paid in. Like that kind of sounds overly simplified because like there's a lot that goes in between with the deductions and the credits and people's situations. So that could totally be why. But it is funny though, because like people will always think that you did something wrong in preparing their tax return because they're like, my friend got 4 grand back, and they're like, we need to go to his accountant or something like that because he got 4 grand back. And it's like, well, no, he made half the money you did and he has double the kids that you have. And so that's how some of that factors out. So
Right. So there's no, like, the numbers are numbers, right? Like Jay-Z said, men lie, women lie, the numbers don't. Right. So it doesn't
right.
matter what tax professional you go to, your numbers are your numbers, and they can only give you what you can get, right? So
in this
what
in the
are some of the
simplest
go ahead, I'm sorry.
Yeah. Well, I was just going to say, in the simplest way, yes. Now, there will be some situations where maybe like we'll notice things that an accountant's not doing. So like, and this might lead into your next question where it's like,
Yep.
hey, what are some of these deductions? Like, what are some of these credits that you're talking about? So like, I might do so. Like, if you tried to, well, we actually did this. Do you remember like
Yeah.
3 or 4 years ago? You were like, hey man, can you log into my TurboTax and like take a look at it? And like, I went in there and whipped it around a little bit, and all of a sudden you were getting back like 700 more bucks. Do you remember
Yeah,
that?
yeah, exactly.
Yeah, so like sometimes there are situations where it's like, oh, you know what? Well, he didn't know about this, or and some of those things that like are probably worth mentioning would be like, all right, so everybody is entitled to a standard deduction. So the
Okay.
government says, you know what, the first about $14,000 that an individual makes, we're not going to tax that. We're going to give you a standard deduction of 14,000 bucks.
Okay.
And so when you make 20,000 bucks, you're only taxed on 6 grand.
Mm.
Okay, because that standard deduction like kind of wipes out the first 14K. Now, the other side of that would be like I can itemize my deductions. And so itemizing your deductions is when you go and you say, okay, I've got a standard deduction of 14K, but there's this laundry list of itemized deductions that I can take. And it would be medical expenses, property taxes, DMV taxes that you pay,
Mm.
state income tax, sales tax, like those types of things, mortgage interest. You could, if you have a HELOC on your house and you used it for investment purposes, there's investment interest, there's charitable donations, cash and non cash. That grouping of stuff that I just told you about makes up itemized deductions.
Mm.
If your totals from the group of things goes over 14,000, then you can itemize your deductions. And if that equals 20,000, then you have 20,000 minus 20,000
Mm.
and you pay no tax. So if somebody's not like asking you, hey, like what were your DMV taxes? Or, did you buy a car this year? Because when people buy a car, they pay a bunch of sales tax.
Mm.
So, you might pay $4,000 in sales tax. And, if an accountant's not asking you about that, you maybe wouldn't know that you can tack on sales taxes to your itemized deductions. And so, somebody who's aggressive and good and is looking out for you that way is going to be able to maybe find more deductions that you weren't necessarily thinking about. And so, from a deduction standpoint, that's some of those things. We'll get to some other stuff, but I mean, like, you might contribute to a health savings account. And if you do that, you can deduct up to, like, for a family, like 7,500 bucks
Oh wow.
if you contribute to a health savings account. You can contribute to traditional IRAs. You can contribute. There are things that you can do that can really reduce your tax if you're proactive about it and you know about it. So
Gotcha.
that's kind of like a deduction type thing. And then we talked a little bit about the credits, which is like earned income credits, child tax credits. If you have kids in college, there's American Opportunity credits. If you buy electric vehicle, you might be able to get an electric vehicle, or you put solar on your
Yep.
house. There's just stuff like that that's out there that, like, us regular families are coming across on a regular basis, that maybe when you jump into TurboTax, you might be able to, like, kind of take the steps and check some boxes and answer some questions and catch some of that. But there's also a chance you might miss some of that because you
Right.
don't necessarily know what you don't know.
Exactly. I think that's one of the biggest things is that you may see the block boxes come up on your TurboTax or Intuit or whatever it is that you're doing, and you don't understand the information to even know if you did it or didn't, right? Like,
Yeah.
or what is supposed to be rolled over. So there's so many intricate parts, and I think what I want the dads to really understand is that to be the best prepared, you have to keep some way of documenting all of these things so that it's a lot easier to when you go get your taxes done. So, what are some ways that have worked in regards to keeping accurate documentation with these things? Because I know for me, I'm not gonna lie, my car note comes in or my wife's car notes come in, and like it's on auto pay, it gets scrapped. My tax documents come in, but most of the stuff that I have is online. I can just download the so what are some strategies that dads can use to to have better record keeping for their taxes when tax season is approachable?
Yeah, so I mean, like, I keep like a folder. I mean, it's a little bit tough because, like, on one hand, you have to know the stuff
Hmm.
that matters, right?
Right.
So, like, if you're just getting like your monthly car statement and you're paying your bill,
Hmm.
like, there's nothing to do with taxes with that. But, like, when you purchase your vehicle and they give you that purchase agreement, you want to keep that.
Gotcha.
But, like, that's the kind of stuff that, like, you kind of need to know, like, what matters and what doesn't matter.
Hmm.
But essentially what I do is I use like a cloud software. Well, it's a cloud-based website called box.com.
Okay.
And within box.com, I just have a folder that's like personal tax.
Hmm.
And when I come across some of that, like, important documentation, I'll always just kind of drag it into that folder. So if I go drop off, like, something at Goodwill or something like that, I take that little receipt that they give and I'll scan that thing in and just drop it into the folder. If I buy a vehicle, I drop it in there. If I bought a house or real estate or whatever, I drop those important documents into there. That way it's like a collection of stuff throughout the year that like might pertain to my tax situation. What's probably most important though is like all these documents that we get in the mail over these, like, this time of year, like all the W-2s and the 1099s and all that stuff is starting to come in. So, those things obviously are really important for filing the return. So we make sure to save those too. But essentially, like, you could have kind of like, one kind of like, maybe it's an Excel spreadsheet or something like that, where you kind of just type in like, these are the types of things that I have for my tax return. I'm going to have my W-2, my wife's W-2, my Wells Fargo interest statement, my Robinhood stock sales. And you kind of have like a line by line checklist of the things that you would normally have. And you could kind of like, that's just one way that you could kind of keep track of it. That way you have like a list to follow when it comes time for tax season. And then if you have anything throughout the year that's maybe different, then maybe you just add it to your list. And that way you kind of have like your own checklist of things that you're going to need for your tax return.
Gotcha. That makes sense. That makes sense. So, what are some ways that we can maximize our tax savings, within legal? We're not trying to be illegal here. I seen this something on the news a little while ago that some guy manipulated his taxes to get almost like $1 million back. And he actually got paid, and they didn't catch it for like a year or two. We're not trying to do
Mm,
that, right? We're not trying to do that. But there are some ways to maximize some of those things,
no,
right? There
don't do
are
that.
some ways to maximize your returns, correct? What are some of those strategies?
Yeah. So, I mean, like I love starting with like retirement planning. I mean, like that's going to be a spot where for me, you get a two-edged sword benefit where it's like, okay, if I contribute to my retirement plan, and it depends which kind of plan you have, but in a lot of plans, you can contribute to the plan and you're going to get a tax deduction for contributions to your plan. You're going to save money on your taxes because of it, and then you're also, like saving for your future too. So
Right.
I mean, like, if you make $100,000 and you put 20 grand into a 401k plan, like you're probably going to save like 4,000 bucks on your tax bill. And I mean, you're 20 grand out of pocket because it's in your 401k, but like that is going to grow over time and kind of multiply that way, so that you're planning for your future, but you're also saving taxes right now.
Right.
So you could start with that, but like something like that, also just having like a good knowledge of what your deductions are. I mean, like I ended up like kind of sharing some of that stuff, but like having a knowledge of what those things are and like how to get them is good. But like I don't want to have anybody like spending a dollar to save 20 cents.
Right.
Like I'm not going to tell you like, hey, go give $1,000 to charity so that you could save $200 on your taxes. But if you want to give $1,000 to charity, then like I'm going to tell you like, hey, you're also going to save 200 bucks on your taxes, which is nice. Like it's a win, it becomes a win-win.
Right.
And so for several of these types of things, you're definitely just kind of wanting to do that cost benefit analysis and just kind of understand like, hey, this is something that's really worth it. But there are definitely some little moving parts that come along with like being able to maximize your tax refund. Like one thing that comes up quite a bit is like people who have kids in college. If you're married filing joint and you make over $160,000, you don't qualify for the American Opportunity Tax Credit.
Oh
Like you
no.
make too much money. Okay. So
Mm.
what we do is we're like, okay, we're not going to have the parents claim the kid as a dependent. And that costs the parents $500 on their refund, but the kid will then get $1,000 to $2,500 back on their own return.
Oh wow, I didn't know that.
Okay. Yeah. So, I mean, like, there's little intricacies like that where you're like, well, you know what? Let's kind of look at that, and let's make sure that, we're kind of lining these things up in ways that do maximize your refunds. At the end of the day, though, I mean, we want to be careful about refunds, and we
Mhm.
want to know what people's personalities are. There are people out there that do not want a refund. Like, they
Right.
view a refund as an interest-free loan to the government.
Right.
And I can see that side of
I can
it.
see that as well.
And I also have people who are like, dude, if I have it, I'm going to spend it. So I'd rather get a big old refund back and then
Right.
have money to be able to like pay off debt or do whatever I want
That I
with it. Go
understand
on
too.
vacation. And then there's other people who are like, hey, I don't really want to pay any taxes throughout the whole year, because even with the penalties and all that kind of stuff that comes along with it, like, I'm going to do other stuff with the money and make more.
Right.
So I've got some people who have like a $50,000 tax bill, and then they just stroke the check.
Mm.
Like, but they were like flipping houses and like doing stuff like that throughout the year, and making money with, quote unquote, their tax money.
Right.
So really kind of understand like who you are like in that category. I mean, if you're just getting like if you just have like W2 income only, your flexibility is really kind of limited because there's only so much that you can do. I mean, the government's taking out Social Security and Medicare taxes, they're taking out income tax. And as far as your flexibility, it's really kind of like locked into like your retirement contributions, your health savings account contributions, your itemized deductions that I mentioned, and then any credits that you might qualify for. Like you kind of alluded to, we'll talk in April, but I'll give you 10 things you can do if you have a business.
Right.
If you have a business, there's a lot of flexibility.
Right. I got a question for you. So, if do you think it's a good idea? So, because I read in an article, like this growing like push to like incorporate yourself, right? So, like having an LLC of your own that's like basically just to run your household in, right? And treating your life as a business and putting your house in the LLC and things like that. Like how beneficial are strategies like that, and how beneficial is it to actually have a business? Is the license, is having that tax benefit of having a business beneficial, even if it say doesn't make any money or doesn't make much money or whatever?
No, you need it to make money.
Okay.
If it doesn't make money, then like the IRS is going to look at it as a hobby or a
Mm,
personal expense. So, and when they do that, they disallow all the losses. So
gotcha.
if you're seeing somebody on TikTok who's like, "Hey, put your personal residence in an LLC and all that kind of stuff," we're not doing that kind of stuff. Like
No.
that kind of stuff. No, you need to have, like, if you're going to set up an LLC, you need to have genuine business purpose, and you need to have revenue running through it. That's the red flag. That's the stuff that the IRS is catching. We do about 1,000 returns a year, and we might get one audit a year. But
Oh,
it's
okay.
because we're like protecting our clients from those types of things that are out there that people will say will work, but eventually like they end up getting caught up on.
Gotcha.
And so, yeah, I mean, any of the personal stuff you're not really going to run through. I mean, I've maybe seen where somebody like maybe Airbnbs their basement,
Mm-hmm.
and lives in the upstairs, and maybe they've like put their house into an LLC. For those reasons, I'm fine with something like that. But because you're renting your house out 200 days a year, your basement out 200 days a year, there's like profit potential there. And so like you might have some of that. Now, as far as like if you do have a business and you are generating revenue doing something, some of the personal expenses that you have are deductible. I mean, like, yeah, you might have a home office. You
Right.
might write off some of your cell phone bill. Like, I'm going to write off half my cell phone bill. Some of those like personal type expenses that are out there, are suddenly going to become deductible. And so, if you do have a side hustle or something like that, I have no problem with kind of offsetting some of that kind of stuff with, expenses that might normally be personal, but can be kind of like tied to business because, you're doing some of that. So I'm a fan of the side hustle, but like, don't just lose money every year. Like, it's not one of those things where, if you take a loss from a side LLC three years in a row, IRS is going to audit that stuff.
Mm, got you. That makes perfect sense.
Yeah.
Perfect sense. So obviously you are a CPA,
Yep.
right? What exactly is a CPA? Because from most people think that they're just tax people.
Well, I mean, a lot of them are. Yeah, a lot of them are. CPA stands for Certified Public Accountant. And, there's kind of two routes you can go when you come out of college. You could go the audit route or you could go tax route. And, people who do audit, they are going to be like within the books. So they're going to be like auditing companies' cash, and they're going to go through all their transactions and make sure nothing's sketchy and all that kind of stuff. I mean, when I came out of school, it was like '08 and the job market was kind of tough. They said, "What do you want to do, tax or audit?" And I kind of was just like, who's applying from, which side has less applicants? And they said, nobody's going for tax, everyone's going for audits. And so I went tax. And on the audit side, I mean, they're usually going to be like the CFOs, and they're going to, because they're going to be in the numbers. So you'll see a lot of CPAs who are CFOs and analysts and all that kind of stuff that kind of went the audit route. For people like me who went tax, I mean, like, we all have to pass the same exam.
Right.
And, like, I had to take auditing and do a little audit work and all that kind of stuff. But, yeah, our primary focus is sitting in tax. And so, like, I've worked with big businesses, small businesses, individuals, and nonprofits, any of the type of taxes that are out there. Like, we've done some stuff with it. So,
Mm-hmm.
I've kind of just built a practice where I mostly specialize in small business and like high net worth individual taxes. But like, like, we have minimum clients who pay us 300 or 400 bucks a year to do their taxes. And then we have people who pay us thousands.
Right.
And so, it just kind of depends. But, for me, I have bookkeepers who work for me that like will do the day-to-day entries as far as keeping track of people's numbers.
Mm-hmm.
And I'm mostly a planner and an end user with that bookkeeping. So, I go through, and when I prepare people's business returns, I review the bookkeeping. I make sure that everything's categorized right. Look for all the red flags. Maybe account for things that the bookkeepers didn't really know how to account for. And we're kind of making all those adjustments to make it look good for the tax return.
Oh,
So,
that's awesome. So what is
yeah.
the do you believe that it's more beneficial for families to actually go and sit down with a tax professional versus the online avenues,
So
and
I think it
why?
kind of depends. I think it depends on your like education level, and I think it depends on how much you have going on. If you're like sitting there and you're like, we get one W-2 and we own our house or something like that, and you're like decently smart, like, you're gonna be able to go figure it out.
Right.
Like, for the most part, you're going to be able to figure it out. I mean, it might be one of those things where you just say, hey, you know what? Like, maybe I want to have somebody look at this and just see if there's anything else that I should be doing different. You might be able to do that and like get a little education on it. But, like, I would say, like, there are a portion of people who self prepare, and there's times where people bring me their returns, and like, I would say, like, hey, I wouldn't really do anything different. Like, this is kind of, looks pretty standard. You could be, pushing more money to a retirement plan, like,
Mm-hmm.
like, there might be some stuff like that. But overall, I'm kind of the mindset, like, if you want peace of mind and you want to know that you're just like, it's getting filed, it's getting looked at, it might be worth it to you to spend a few $100 to have somebody file it for you. If you're like, hey, you know what, I'm pretty decently educated, kind of know this space a little bit, I have no problem with people filing on their own. I will say though, as your tax situation gets more complicated and you start to get investments, or you have a side business, or maybe you bought a piece of real estate that you're going to rent, or like any of that kind of stuff, that's where it starts to get a little bit more difficult. And to me, like, I think there's probably a cost benefit to just being like, I'm just going to put this in the hands of an accountant, because like, they're going to know all the different types of stuff that I can expense, and they're going to ask me questions that maybe I didn't really know.
Gotcha.
And so I think that's where we start to add value. And I don't want to like really work with people just to be like, hey, give me your $300 or whatever so that you get peace of mind. Like, I love the ones that come in and it's like, hey, I'm going to pay you $1,000, but you just saved me five.
Right.
Like, and then I start to feel like, wow, like, like I'm providing a good value for people for the money that they're paying me.
Got you. And people don't understand, like, filing your taxes isn't free. You just don't think about it on some of those free softwares because they take it out of the return. But you're
Hmm.
paying the $200 for the most part anyway. I
Yeah.
think
Yeah.
because there's so many softwares out now. There's a little competition, so you might be able to get it for $100 or whatever. But for the most part, you're gonna pay $100 to $200 to file your taxes. Might as well at least get one session in with a CPA of some sort, right? Like, even if it's once every 5 years or so, like, or when your
Right.
situation changes, right? But invest. I think you should invest in talking to a CPA at every stage of your household's finances. So if
Yeah.
you add a house, then you should speak to a CPA that year. If you go the next 5 years in that same condition, the same house, same finances, nothing really changed other than maybe you got a raise or whatever, you may not need to spend $300 and talk to them again about the same stuff.
Right.
You know what I mean? Like, but we probably should speak to somebody at every stage in our finances.
Yeah, it is good just to get like kind of I mean, like, it's like an oil change. It's like, any of those types of things that we pay for, like maintenance type stuff, where it's like, hey, hey, we're going to keep the house in order.
Right.
And we want to check in and just make sure. And the nice thing for us is that we're like really engaged in all of people's financial stuff.
Right.
And so, like, if somebody comes to me and they're like, hey, I just, like, I have kids, or, something like that. I mean, like, it's not uncommon for us to be like, hey, do you have like life insurance,
Right.
or, a living trust, or, any of that type of
Right.
stuff? And like, we're kind of looking out not just for tax situation, but it's like overall wellness. And
Right.
I mean, like, for me, I can tell if somebody's doing everything they should within their taxes within 5 minutes.
Really.
Like, I've looked at so many returns where it literally, like, if you sent me your return, I could be like, it would take me 5 minutes to email you and say, hey man, like, you should be considering this.
Mm-hmm.
Hey, I didn't see any deductions for your vehicle. If you have a rental property, it's like you forgot hazard insurance as
Okay.
a deduction. Like, I would be able to tell you that within minutes.
Got you. That's awesome.
And so,
That's because
yeah,
you're
it
the
doesn't
goat, Gron. You're the goat.
it's a fun thing to know about. I mean, like, it sounds weird because we're like, a lot of people are like, damn, dude, like, accountants is there, that's got to be such a boring profession. Like, but I mean, today, like, my day started out with I was on a call just like this. I was on with like 35 people who run events,
Mm-hmm.
and they didn't know how to structure their businesses.
Mm.
And so I was on with them. Then I did a couple calls. One with one of my staff who was asking me questions about, certain tax treatments. And then I hopped on with somebody else and was talking about their business. Then I sat down and like prepped the tax return for my brother-in-law. And so like it's one of those things where it's like, hey, there's a lot of different things going on, but a lot of us just think like, dude, these accountants, man, they're just like sitting in their basements and like friggin' grinding out tax returns all day, which like sometimes I am. Like, I'm not gonna lie, like sometimes I am. But also at the same time though, like we have like a really good business knowledge that goes across the board on stuff. And so, like we're here to help people. Like, I mean, that's why it's like when it says like certified public accountant, like it's using the word public for a reason. Like
Mm,
we are here to support the community and be a liaison between the IRS and the public in keeping the rules the way that they need to be kept, but also making sure that people aren't paying more than they should.
right. That makes perfect sense, man. That's, I love that. I love this conversation. I think it's is ta- taxes are a part of our everyday lives, regardless of what people want to believe or not, right? So,
Yeah.
and I think one of the things I've learned is that taxes, tax breaks are designed for a handful of things, right? It's designed primarily to give is the government incentivizing you for what they aren't going to build out in infrastructure, right? So you're going to get like for real estate, right? There's huge tax breaks in real estate if you're in the real estate business and you're rehabbing homes, and that is because the government can't actually go out and bring all of these houses up to code, so they have to give you the incentive for you to do that. It's the same thing that you see with solar panels or any of those things. You're getting incentivized to do some of the things that needs to be done for our society, right? Without the government having to do it. Is that true?
I mean, for the most part, the government can really kind of like push people into doing certain things, like with tax breaks. I mean, if you look at like
Like ripping up
opportunity
all your
zones,
grass, right? Like a little while ago, they make you rip up all your grass and put
yeah,
rock down, right? And then
yeah.
you
Like,
you're about to speak on opportunity zones. I'm sorry to cut you off.
yeah, no, no, you're good. But that's a perfect example too, man. Like, yeah, like, they're like, hey, we'll give you like an incentive to not use water, like that we're gonna help you pay for it. Or opportunity zones was trying to get investment into inner cities and places that weren't get traditionally getting investment for rehabbing and stuff like that. Hey, you know what, instead of paying capital gains on some of your growth, if you reinvest that money into these opportunity zones, we'll let you, for the next 10 years, we'll make it to where you don't have to pay any taxes on that. And so the government, like, it as much as I mean, like, I'm very like libertarian in the sense of like you want the government to stay out of stuff, but like they're so deeply ingrained when it comes to the tax situation and like people's money at this point that like they are able to put things in place that will make sure people spend money on it.
Mm,
And so when you look at what some of those, like when you look at uh the government saying, hey, we're going to cut taxes, that is like literally, we want more money in the consumer's pocket because we know they're going to spend it. And
right.
that's what we want turnover, and we want to look good, and that sort of thing ends up happening. And so yeah, like absolutely, like you got to pay attention to the media on that kind of stuff. When you see, hey, we're going to do 100% bonus depreciation, we're going to let you write off 100% of any like capital assets you buy, that like immediately, when you have like somebody who runs a lawn care business, or you have a construction people who do framing or something like that, it's like, dude, I could go spend $100,000 on equipment right now and it's going to save me 30K in taxes. They
Right.
are going to go buy the equipment. And that's great because that's what keeps it turning over. And
Right.
so, you
Because our
know,
economy is actually based off of consumerism.
It is.
right? Like
And it, yeah,
we
totally.
yeah, it's 100% based off because I read that. I read a lot, so I always
Yeah.
have these like weird ass facts that come from my brain from something that I've read, and I read in an article about those things, like how our tax monies or our society in whole when the troops were coming back, we're trying to figure out how we were going to support the troops when they came back and from the
Yeah.
First World War, and we got into the business of manufacturing. But in order for the manufacturing business to succeed, you all have to go out and buy the stuff so that we
Yep.
can stay employed, right? So then we
That's
have
right.
to ramp up the that cycle for your monies and things like that, right? So I'm like, man, it it's such an intricate portion of our society that goes way unnoticed, right? It's so much
Yeah.
crazy BS that gets pushed through via the most uninteresting thing, which is taxes, right? So it
100%.
as we try to prepare dads in this like upcoming world, right? What are some things, some go-to things that that every household? Obviously, I'm saying this with the full understanding that some people are not meeting their basic needs. And obviously, I wrote about this in my blog post last week. If you are not making enough money to take care of yourself, your family, and your life, then some of this stuff may not even be applicable to you right now. But for
Yeah.
everyone else who is basically meeting their needs, what are what's the checklist? What are the things that we all should be trying to trying to get our families to afford these things, life insurance, and that are also applicable for tax deductions and write-offs and things like that?
So, I mean, like everybody's going to value certain things in different ways. And I mean, you are going to have some people who are, like anti debt, for example. Like, I don't want any debt.
Like a Dave
You're going to
Ramsey.
have some, yeah, exactly. You're gonna have like your Dave Ramsey folks. Then you're gonna have some people who are like, dude, I'm gonna borrow every dollar I can get my hands on because like I can go out there and make money.
Right.
And it's how it all kind of comes down to like where your value system kind of lies.
Hmm.
And I mean, like, I think if me and you sat down and we said, hey, you know what? Like, if I got, an extra $5,000 right now, what would I do with it? I mean, like we could get 10 different people and all of us are going to have different answer.
Right.
And like one person's going to be like, I'm going to go bet it on red, like and take a
Of
spin
course.
and try to double it, like
Right.
there's going to be some of that. And then there's going to be people who are just like, hey, I'd save every penny of it. So, I think what's important is just kind of like recognizing who you are and trying to elevate yourself. I mean, like,
Mhm.
we all want to have growth mindset and like I think if people have a growth mindset, then they're going to be able to position themselves to make those smarter decisions because like you mentioned, hey, I do a lot of reading and it's like, but you know what, there's some people where like they might come in and get their taxes done and I'm like, hey, you want me to explain it to you? No, just put it in the folder.
Right.
Like, I don't even want to look at that thing,
Hmm.
And for me, I'm always kind of like, dude, like, you should kind of at least try to understand this.
Right.
So, if you're consistently that person who's kind of like, hey, I don't want to know anything about it. I'm just, show me where to sign and, click file or whatever. Like, there's a chance you're going to miss out on stuff. But if you're like, hey, yeah, like pop that thing open and let me try to understand some of the stuff that's in there, and maybe you do read a little bit about tax policy and maybe some of the changes that Congress is making and all of that kind of stuff, then when that article comes out that says, hey, you know what, like you could get a 30% credit if you install solar panels on your house. I mean, dude, for some people, like that's going to be 30,000 bucks. Like you might get a $10,000 tax credit for putting solar panels on your house. And, that might be something that you're like, I was thinking about doing that anyways. Like, why don't I do that? Because I made some money this year. And so, like you have to kind of stay in the game. Like I think that's number one.
Yeah, absolutely.
And no, number two is just like talking to people who know what they're talking about. I mean, like I would just say that, especially in today's world, I mean, like, dude, we're scrolling, we're on TikTok. Like, there's politically divisive things where it's like, hey, like, I'm not going to believe anything this guy says or whatever because he voted for Trump or like whatever, right? But it's
Hmm.
like find the expert, like find people who are really good at this type of stuff,
Exactly.
and let them kind of guide you. Let them like be open to that kind of stuff. I think is super important. And I mean, from there, it's like, what are your goals? I
Right.
mean, like, I would say, I mean, if you said what's important, I think life insurance, for example, completely makes sense for everybody. Like,
Everybody.
there's not anybody who shouldn't have a life insurance policy. You can have a life insurance policy for the price that it would cost you to go to Chipotle tonight for dinner or whatever, like, and when you think about that, it's like, man, for like $40 a month or something like that, like my family would have $500,000 or $750,000 of life insurance if I died.
Right.
And when you like really like break something like that down, like that should be a priority.
Right.
Is it for everybody? No, it's not. And then it's sad when
I,
something negative happens.
exactly. I think that's the thing that I'm trying to get to, in this conversation too, is like there are a handful of things that you still, if you can afford it, that you should absolutely add to your life. Life insurance is one. I even think some form of retirement. No, it doesn't have to look like all of the other forms of retirement, but you can't work forever, right?
Right.
So you need those two things. You need to have some form of
Totally.
retirement and something about death. Those two things have
100%.
those two things go hand in hand, right? And you said something that is right along the lines of one of my favorite books on finances, which is The Psychology of Money by Morgan Housel. I I I I want everybody to read that book, right? And he
Yep.
touches on exactly what you said earlier, which is all things matter in different ways to different peoples depending on your circumstance. So it is extremely important that you have a good understanding of where your finances are, what your finances looks like, what you can take on, what you need to prepare for, and where you need to actually put your attention. Because for some of us, that extra money probably needs to go towards creating more opportunities, whether that be through school or certifications or whatever it may be to move you up the ladder so that you can have more money so that these things don't seem like bills because they aren't bills. I think the most mature thing that I've ever done in life when I knew I was mature is when I was
Hmm.
like, yeah, I'll pay the extra $10 a day for the rental car. Right? Because I wanted I was in a situation one time where somebody hit me. I didn't pay the extra $30 to have a rental
Hmm.
for the insurance, and I had to pay out of pocket for that. That's
Yeah.
crazy. So I think you have to do everything in your right to protect your family at all costs, right?
Yeah.
And whatever you can skim off the top to add more protection to your family, the better.
Yeah. And I would just say that, like, we were not trained in this. Okay. I mean, like, me and you grew up in the same place.
Right.
Like,
Oh, speaking
we,
of, if you don't know, Ronnie and I went to high school together in Las Vegas. He lives in Salt Lake now, so I do appreciate him for jumping on from Salt Lake. But we old high school friends, and kind of
yes,
kept in contact with each other once social media was available over the last 20 years or so. So, and I've been
it's
really
been awesome.
interested in everything Ronnie has done, and we've had our conversations about social issues and everything else. But he's one of the most knowledgeable people in this field, which is why he's on this podcast.
And I think where we were not trained in this kind of stuff, and like our parents like maybe didn't like my parents weren't like, I mean, like my dad passed away when I was 16, we didn't have life insurance. Like my parents were like, dude, we barely like paying the electric bill,
Yeah.
like we don't have life insurance. Like, what are you talking about, dude? Like, so like we don't get trained in this kind of stuff. We don't understand like the consequences of it. And so like it becomes like incumbent upon us to be able to be like, okay, how do I elevate? Like how like and for me it was like, who do I need to talk to? Like
Right.
what are other people doing who are like, like in a space that's like higher than me? Like what are these types of things? And I mean, dude, we like went up the court, we went up the ladder, man. Like I mean, like when I came out of school, like I was making like 48 grand a year, like which is like back then fine or whatever.
Right.
But it was like, and then you're getting that like 5% raise per year and all that kind of stuff. And it was like early on, like it was, let's just take baby steps. It
Right.
was like, what are we doing? Like, and like one year it was like, hey, somebody came to our office and it was like, they offered to give us a living trust for like half price. And I
Hmm.
remember going to my wife and it was like $1,200 or something. And it was like I was like, "Hey, like we have kids now, like within the living trust, you can like say who you want to take care of your kids if we died. You can like create medical power of attorneys, you could put people in like all that kind of stuff, right?" And it was like, dude, we don't like that. $1,200 is kind of a lot, but it was like that was our goal for the year. We're like, you know what? Let's do the living trust this year. Then like the next year, it was like something else. Like we
Right.
were like, what is the one smart thing financially we're gonna do this year? And so like I don't expect everybody to like come out here and just be like, man, you know what? Like I've got my net worth statement locked in, my student loans are paid off, I have no debt on my cars, we paid off the credit card debt. Like no one's gonna do that stuff overnight. But like
Facts.
if you can lock in and just say like, man, like this one dude was telling me like how helpful it was to like have like a little bit of money set aside for my kids' colleges. Like
Mm,
when we did that, when we set that up, we had two kids and we were putting $25 a month into each one.
mm.
And it was like for a minute there it was like, oh cool, you got $300 in your kids like 529 plan.
Yeah.
But at the same time, like now that we've elevated a little bit more, now we put like $100 in each kid. And it's like now there's like 4 grand in each one.
Right.
And it's just one of those things where it's like take those building blocks and just like work them into what you're doing, but just like maybe write down like those 5 priorities where it's like, man, I wish I didn't have credit card debt, or I'm
Right.
going to try to pay my car off, or like whatever that is. And then just like obsess over that a little bit to where you're like, dude, instead of going to freaking like Cheesecake Factory tonight, let's just set that like let's eat ramen noodles tonight and take that $75 and like drop
Put
it
it
in
somewhere
the like,
else. Right.
yeah. And you'll like start obsessing over some of that stuff, but it will help you become so much more peaceful in your approach. Like
That's awesome.
these types of things stress us out.
Absolutely.
So, I mean, I just feel like, you're going to go baby steps on this kind of stuff, but figure out what's important to you and then just work towards it.
Absolutely. That's exactly a great place to kind of end this because I'm there too, right? So this
Yeah.
last year, I took some risk and took on more debt than I necessarily needed to. And this year, I'm going to be the brokest SOB in the world because that is my mission. My wife and
Mm.
I had the conversation before the New Year's, and I told her that 2024 was back to zero because my goal is flexibility, financial flexibility,
Yeah.
and
Yeah.
be able to go and come as I please. So it's super important to me that I don't have such a heavy financial backpack that I have to carry everywhere. So and that also is aligned with my number one statement, Dad. So to always remember this, no matter what we talk about, if your wife ain't on board, then it's probably not good for your family. It's probably good for you, but not for your family. Your wife has to be on board. She lives in that household. Take her into consideration. Yes, you're the man of the household, but being the man of the household means that you take her into consideration because you want her to take you into consideration because she's the woman of the household. So, Ronnie, thank you so much for being on the show, talking and everything. I really, really, really appreciate it. This is some necessary information for people to understand about taxes. You're going to have to go through this journey every year. It's a race that we do every single year. And the more informed you can be on your own personal finances, the easier all this mundane tasks that we have to do is easier to navigate. So thank you again. Appreciate it. And if you're watching this, thank you. Subscribe to the Good Dads Club on Facebook, where we will be, talking about these types of things and helping us as dads to get better and better and better. So y'all take care.